Herman, let's talk about the last 12 months before we get into the next 12 months. What have we learned and what have we changed?
Sure. What have we learned? We've learned that regional banks that have an over-reliance or over-concentration in their business model really can lead to instability. We saw that with SVB, with their interest rate risk within their securities portfolio. Now we're seeing it more in real time with New York Community Bank with their concentration risk in multifamily real estate, particularly rent-regulated apartment lending. So the rest of the larger regional banks have a more diversified business model, which supports them with this uncertain operating environment today.
Herman, where are we on some of the regulations that were targeting some of the smaller banks that have been highly contentious, I should say? Have they moved closer to reality or further away?
It depends on which regulation we're talking about. So with the Basel III endgame rules in flux, given the comments from the Fed earlier, we're still waiting to see what the final rules could be. One thing is that we expect the endgame to incorporate the unrealized losses in the AFS securities portfolio within the capital calculation. So in that respect, we are closer to reality. We're still waiting to hear other potential rules down the pike, including liquidity potential ratios, which would address the outflow issue that SVB faced last year.
Herman, there's been a lot of discussion around consolidation and why we haven't seen more of it. There has been a reluctance, partly because a lot of transactions have not gone through. Do you have a sense of just how pent up the demand is to consolidate? Should the regulatory environment be more amenable to that type of transaction?
Yeah, I think 1 year after SVB, an important lesson is that scale really matters. You've heard that most locally from banks like PNC, banks like US Bank also have gained scale in recent years. And the industry is really watching what's going to happen with the Capital One Discover deal. It's one of the largest deals that we've seen over the past few years. And if that deal openly does get a regulatory approval, it could really open up the floodgates for more M&A over the next several years.
Herman, do you have any optimism, or what is your optimism that you actually think that deal goes through? Because the direction of travel in Washington has been to block these types of deals.
Right. You have heard a lot of consternation from the Democrats, including Senator Warren, in terms of the competition involving credit cards. But in our view, our colleague Nathan Dean sees a better opportunity for approval. And I would point to the fact that if we're talking about Visa and MasterCard, the two processors, it does potentially create a third player within that space that could open up more competition, which would be great for the economy and businesses in America.